meaning that if you closed it, let's say you closed this account, because you can see here, for example, you added something, you got $9,000 in limits. So if you close this account, your limits go from $9,000 to $6,000. But over time, if it closes on its own, this actually will not be re-rated onto your credit report as if you close it, it'll say closed by them. So it won't hurt you over time, like a pair of stairs. But if you close it, it's like stop it immediately. So like I said, keep old accounts old and keep debt low as possible. I know today it's hard to do that in a perfect world. People are living on credit cards, but certainly do your best to keep your debt low as possible. Question?
So by the same token, would you want to just go out and open as many accounts as you can?
Why?
For this to raise your available.
You can do that, but but if your credit score is 550, 580, and you have some collection accounts on there, you're not trying to get approved. That's a good point. I knew you were going to say that. His question was, his answer was, or a statement, why don't you go out and open up and increase your limits by opening more accounts? Well, in today's credit crunch, I got an 800 FICO score, and I haven't seen a credit card offer in a year. So I mean, every day, my mailbox was just stuffed with them every day, but not much anymore. And they're really scrutinizing income. They would say, send me a 30 days worth of paycheck stubs, 09 tax return. I mean, you'll be surprised that there are credit card companies where it used to be credit scored. We didn't need all that stuff. Just based on your good credit, here it is. But now they want to see some financial information.
But if you can.
If you can. But on the same token, let's say you're trying to apply for a business loan to start like an SBA loan, and all of a sudden you have all this open credit with zero debt. It becomes a risk. It just depends on what creditor from a perspective, what they're looking at from a mortgage or a business loan or something like that. So if you close them, you take it away, it's going to hurt you. So be careful how you walk in the minefield, so to speak. Okay. Here's a quick fix. Instead of going through all the inquiries and so forth in the report, see if you can have like mom, dad, and uncle add you to a credit card that's been around a long time, length of credit history, and with a high limit, little or no debt, and add you as an authorized user, piggyback that credit card. So if you turn 20 years old, and your parents have a credit card 30 years old, you can have credit report 10 years before you're born. It's authorization activities. Now, from a human element, as well as a FICO score improvement, it says A for authorized user versus R for revolving, borrowed credit versus owning your own credit, but it can possibly increase your FICO score. Years ago, Experian looked at it saying, we're going to take that out of the equation, but it's a major white lie. Because if someone had a 680, let's say a 580 FICO, and mom and daddy had you get two really huge credit card limits with no debt on it, old credit cards, it jumps like 150 points. Now you're at 740. Well, the credit bureau says during the stated income boom, oh, your credit score is good enough to get that 8-paper loan. So Experian looked at it saying that we're going to take that away as far as FICO point gain, but sometimes it works, sometimes it doesn't. But the other two bureaus, Equifax and TransUnion, I've seen it actually improve people's FICO. And that was about 5 years ago. So try it. It can work. So yeah, you're right though on that part about going and applying for other accounts, but be careful. Yeah.
The department stores.
Well, department store. If I had a choice of a 1,000 limit Sears or Macy's versus a $1,000 Visa MasterCard, this major revolving gives me more FICO point gain than this because it's minor versus major. Now Sears didn't convert to MasterCard. So if you had a Sears account for 20 years as a minor account and they convert to MasterCard, now you have a 20-year major credit card history. So on a case by case. And how do we know what's good and bad for everyone's profile? See, I don't care if you've been married for 50 years with the exact same bad and good credit, by opening at Macy's, it might hurt you, it might help you. It just depends on the profile. Okay?
Some credit cards has an annual fee, so we have to get rid of that.
Well, yeah, and then you shop around for rates and things like that, but in a perfect world, if you can maintain zero debt by paying them off every month and not be charged interest rate, I don't care if it's 1,000% a month, See, Fair Isaac does not care about your income. They don't care about your dollar debt. They don't care about annual fees or whatever. They just care about the total percentage of availability. You can make $1 a year or
try to save money.
True. I mean, from a savings perspective, yeah. Wealth building, yeah, that's smart. But from credit, think of it like the credit bureaus. They don't care about that stuff. They care about limit debt. They go like this because now the credit companies are reducing credit limits. When you're they take a look at your history, your pattern, your habits. Are you taking cash advances? Are you writing the checks from the credit card to pay mortgages or PG&E? Now, risk. And there comes the limit. Affects your availability, and there goes your FICO score the month after. Say, if your limits are up here and your debt's very, very low, you're under the radar. They probably won't even care. We talked about length of credit history. I'm going to kind of summarize this real quick. Not using accounts for a long period of time, we talked about that. It may turn inactive or be closed by the creditor or closed by grantor request. It's very, very common. Closing minor or major accounts that have long standing, good standing, we talked about that. You know, never close old accounts. The length of credit history is so big. I won't even get into that, that would confuse you. New credit. Now, we talked about where, okay, should I go out and apply for 6, 7 more credit cards to increase my limit? May help or may be the pitfall of that. But unsuccessful credit applications hurt credit scores considering the unsecured credit cards if the scores are already low. Well, just be careful. I don't want you to go out there and start applying for credit cards up and down the street to increase your limit. People with really okay to bad credit, what's okay, 625 and less credit scores, cash secured credit cards might be a good way. Secure, you put a little cash into an account, they use as collateral up to a year. And we'll talk about that a little bit later. But see, the type and number of accounts recently opened. So as I was talking about earlier, you know, a Macy's account versus a Visa MasterCard account. I mean, if someone had a $2,000 Macy's account versus only a $500 Visa limit credit card account, this will give you more FICO point gain if you looked at a perfect ratio of debt to income. So I'm not saying go out there and apply for, you know, Christmas is coming up and the Macy's will say, hey, open up an account today during Christmas, we'll give you 15% discount. Don't even bother. First off, they're going to charge you right up to here. It's a minor account, so just try to avoid all minor accounts. But if you already have an old account you've had with Macy's or Sears in your wallet for a long, long time, like I had Bourbons until they went out of business from 1985. That was my first credit card when I turned 18. But unfortunately, you can't control that. They went bankrupt. So there's a 3-in-3 rule on credit. Nowadays, mortgage companies want to see at least a 3-year history with at least 3 open or adequate trade lines. So meaning that if you're 18 for the first time, your parents say, here's 50 grand, daughter, to go out and buy a condo. Well, I only have a year of history, so do I have to wait 2 more years to get this? Well, there's ways to massage the credit report. Even in a cash secured credit card, you can ask your bank, when open up that cash secured credit card, let's say because you have no revolving whatsoever, you're a young adult, you can have open that cash secured credit card from 5 years ago, even though you're opening it today. Just like when you go down to your bank and open up a checking account, on the face of the check it says customer since 2000 or 1999. Well, I don't care if you opened the account last week, like Bank of America. I seen my sister had worked there for 26 years, so I know this. They can manipulate the system, saying you've been a customer since 2000, even though you opened up the account today. So when you get your checks, it says customer since 10-year customer since 2000. But you go down to a local merchant, they're not going to take your check because it's a new account. But if it says check number, 10,001 versus 0001, and customer since 2010, if it's an older account, they're most likely going to take the check. So with credit card, cash secured, the same thing. Cash secured, not unsecured. You walk in and apply for a cash secured credit card, if anyone knows what that is, they can make you a customer 5 or 10 years ago. And if they do that in the system, it'll show up on your report as a 5 or 10-year history immediately. Or if mother, father had that 18-year-old daughter as an authorized user, she can have credit that goes back even further. Okay. So lenders do want to see.
Robert, how can they get away with doing that?
I'm sorry?
Robert, how can they get away with doing that, though? I mean,
on the cash authorization access? Well, it's up to the credit bureaus. And Experian talked about this 5 years ago before the market turned, saying that we're issuing loans stated income. People who had 580, now there's 705 FICOs by mom and dad adding to a credit card. That's not right. But that was the way the industry was working. I mean, stated income was invented for the self-employed because the business owners take a loss on purpose so they don't pay off the sand. But they know truly I'm making a lot of money. But then it rolled over to the W-2 employee. Am I correct? So it ended up being across the country, stated income, stated income, stated income.